Hello everyone, this is Mike Torres from VERTEX-FX. Today we'll be discussing the MACD histogram. First, a disclaimer: today's training is designed to instruct in some of the VERTEX-FX charting program. We will be providing some guidelines for using certain features in the software. However, nothing in this training should be intended as or should be construed to be a recommendation to buy or sell any specific security or currency. The information technology, the technical analysis techniques and software presented today should be used by investors who are aware of the risk inherent in trading. VERTEX-FX shall have no liability for any investment decisions and trading strategies or any information provided in connection with the company. Okay, let's get started. This is the chart of the pound. We add the indicator, we press the oscillator, and we add the MACD. As we mentioned earlier, we like the reading 12 on the MACD, and then we add chart, add indicator, we add the oscillator, and we add the MACD histogram. Also, you should have the reading 12 on the histogram. Double click on the histogram, just double click the histogram and drag it towards the MACD, so they'll be overlapping each other. MACD histogram. In 1986, Thomas Asprey developed the MACD histogram. Some of his findings were presented in series of articles for technical analysis of stocks and commodities. Asprey noted that the MACD's lag would sometimes miss important moves in a security, especially when applied to weekly charts. The main benefit of MACD histogram is its ability to anticipate MACD signal divergences usually appear in the MACD histogram before the MACD moving average crossover do. Okay, let me explain this exactly. It's a little bit tricky at the beginning for a beginner to understand it, but it's very important for you to learn it at the beginning stage so that you'll always be using it and it will be a very big edge for you in the market. This is the MACD and this is the MACD histogram. The MACD histogram, the midline is 0. You see here the MACD histogram is moving in a trend. It has a bottom, and here it has lower bottoms, higher lows. So there's an uptrend on the MACD histogram. If you notice, let me draw it a little bit clearer. Move the line like this. Okay, so you see the histogram has a slope. Now, what's happening is that the MACD is still moving lower. Although the histogram it had a low and it has now a higher low, the MACD kept on moving lower and lower and lower. This gave us an indicator that the MACD will cross upwards because there was a divergence, and here the MACD crossed upwards. Now let's look at another kind of divergence. You always find them on the MACDs, these kind of divergence. Here the histogram is higher and it's moving lower. Although the histogram is moving lower, the MACD kept on moving higher and higher. And once the histogram traded below the 0, the MACD crossed. The benefit of the MACD histogram is that it gives us an edge in the market. It tells us to be ready to anticipate that the MACD will cross lower and the direction of the market will change, or the MACD will cross higher and the direction of the market will change. So it's a very important indicator to be used in combination with the MACD to give us an edge in the market, to give us an edge to find the proper timing to get out of your trade. Usually when you see the MACD having a sloping line over here or a line like this and the market is moving, the MACD did not cross yet, it will tell us be careful, the market might cross, so you have to be ready to get out of your position. And here, if you got out of your positions in these levels, you see that the pound dropped from 167 to around 153, and this was from this indicator, or to around 150 to 160. Here you saw there was a rally from the market from around 158 towards 162. So it's quite nice. Look at here, another kind of high. You have the MACD histogram moving lower, although the MACD kept on the histogram had a slope over here. Let's see the slope here. So this was low, it was a lower, although the market was moving lower, but gave us an indicator that the market is ready to cross upwards. Here it tricked us, the market, but you have to have a histogram really trading above for a couple of days to confirm that it is it's not a false break. Always you have to have 2 or 3 bars or 4 bars with high readings to confirm that it is above the zero line confirmed. This is Mike Torres signing out. Enjoy trading the MACD histogram. Thank you.